Hello, and welcome to Explain the Charts, your go-to channel for in-depth crypto market analysis. Today, September 23rd, 2025, we're tackling the big news that has sent shockwaves across the cryptocurrency market. Bitcoin has experienced a sudden and significant price dive, triggering fears of a broader crypto crash. Reports indicate a staggering $200 billion wiped from the combined crypto market since Friday, with Bitcoin dropping below $113,000. Let's jump straight into the overall market sentiment and recent news to understand what's driving this volatile price action before diving into the charts. The primary drivers behind this downturn appear to be a mix of regulatory uncertainty and excessive leveraged positioning in derivatives. The SEC's updated ETF guidelines, issued just days ago on September 21st, have introduced stricter compliance checks, particularly weighing down altcoin sentiment. Additionally, the U.S. Treasury opening a comment period for the Genius Act, potentially imposing reserve rules on stablecoins, adds to the regulatory pressure. We're also seeing a derivatives overhang, with perpetual open interest surging to nearly $930 billion and negative funding rates suggesting an abundance of long leverage ripe for a flush-out. In fact, over $1.7 billion was liquidated in the past 24 hours, with long positions bearing the brunt of these losses. Ethereum, for instance, saw $210 million liquidated after breaking key support at $4,350. On a contrasting note, the Federal Reserve's recent 25 basis point interest rate cut, usually bullish for risk assets, failed to prevent the slide as Fed Chair Powell's cautious remarks tempered expectations. However, there's a significant undercurrent of institutional demand. The SEC's approval of generic listing standards for new crypto ETFs could truly open up the floodgates for broader adoption, with new products potentially listed in just 75 days. We've already seen the first spot XRP and Dogecoin ETFs launch successfully last Thursday, with the Rexosprey XRP ETF having the largest debut volume this year. Major players like BlackRock continue to show strong commitment, with their IBID spot Bitcoin ETF holding almost 750,000 Bitcoin, valued at $88 billion. Even Japan-based Metaplanet acquired an additional $632 million in BTC, and Michael Saylor of MicroStrategy is hinting at further purchases, reaffirming their buy-the-dips strategy. Intriguingly, on-chain data shows more Bitcoin leaving exchanges, a common indicator of strong confidence among large holders expecting future price recovery. Despite the short-term panic, these institutional moves suggest a long-term bullish outlook. Now, let's turn our attention to the daily chart for BTCUSD to visually confirm these market narratives. Looking at the entire displayed range, we can see Bitcoin experienced a significant rally from around $60,000 in May 2024, peaking several times. Notably, Bitcoin topped $124,000 last month, an all-time high that is far above our current levels. This strong upward trend from mid-2024 through early 2025 saw several healthy corrections before a strong push in May and July 2025, which saw price breaking new highs around $123,000 on July 14, 2025, and again on August 13, 2025. However, following that August peak, we observe a steady downtrend into September, aligning perfectly with the current sell-off news. The rejection at the $117,000 level, which the news highlighted, is quite visible as Bitcoin struggled to sustain momentum above this region in late August and early September. The candle for September 21, 2025, closed around $115,282.27, representing a failure to regain higher ground before the current dip. To get a granular view of the recent crash, let's narrow down our focus to the 15-minute chart for September 22, 2025. Starting around midnight UTC on September 22, Bitcoin was trading just above $115,000. However, a significant bearish impulse occurred quickly, with a sharp drop seen in the candles around 5:57 Universal Time Coordinated. Within that 15-minute window, the price plummeted from $114,342.62 to $112,870, confirming the sudden price dive mentioned by news outlets. This dramatic drop highlights the swiftness of the sell-off and the high liquidity events caused by leveraged long liquidations. Following this initial plunge, the price attempted to stabilize, hovering mostly between $112,000 and $113,000 for the remainder of the day. The close for the last 15-minute candle on September 22nd was $112,757.81, firmly below the $113,000 mark. This short-term data clearly illustrates the immediate impact of the negative news and market sentiment. Returning to the daily chart for a broader technical perspective, we can identify critical support and resistance levels. The immediate key support now lies around the $112,000 to $113,000 zone, where Bitcoin is currently trading and attempting to consolidate after the recent drop. This level is crucial. A sustained break below it could open the door for further downside. According to financial analysts, the critical 50-day simple moving average is currently situated around $110,408, acting as a strong technical support. Should this level fail to hold, the next significant support mentioned in news reports is around $108,000, and even further down, the psychological and technical level of $100,000. Historically, the 200-day simple moving average, currently near $83,398, would serve as a major long-term support, though a drop to this level would imply a much deeper correction. On the upside, the $117,000 level now acts as immediate resistance, as it was a point of rejection earlier this month. Beyond that, the previous high of $123,731 would be a significant target if bullish momentum were to resume. Despite the recent bearish sentiment, there are compelling reasons to be bullish on Bitcoin in the medium to long term. The continued institutional adoption, evidenced by massive BlackRock ETF holdings and Metaplanet's significant purchases, indicates strong underlying demand. The recent SEC approval of generic listing standards for crypto ETFs could truly open up the floodgates for more widespread institutional investment. Furthermore, the increasing trend of Bitcoin leaving exchanges suggests that large holders are accumulating, rather than selling, signaling confidence in future price appreciation. The current oversold condition, indicated by an average crypto RSI of 36.18, often precedes a rebound, presenting an attractive accumulation opportunity for long-term investors. Should Bitcoin hold the $110,000 to $112,000 support zone, a bounce back towards the $117,000 resistance and potentially to the previous highs around $123,000 to $124,000 is moderately likely. This bullish scenario would be reinforced by positive regulatory news or a strong influx of new institutional capital. Conversely, there are strong reasons to remain bearish on Bitcoin in the short term, especially if certain conditions persist. The ongoing regulatory pressures, particularly from the SEC's stricter compliance guidelines, could continue to weigh heavily on market sentiment, particularly affecting altcoins and potentially Bitcoin if uncertainty deepens. The substantial liquidations seen recently highlight the fragility of the market due to excessive leveraged positions, making it susceptible to further cascade effects. With over $517 million worth of tokens set to unlock in the next 7 days, there's a looming threat of increased selling pressure. If Bitcoin fails to hold the critical $110,000 to $112,000 support zone, a retest of $108,000, and even a drop to the $100,000 mark becomes a higher probability. A break below $100,000 could lead to a more severe correction, potentially targeting the 200-day SMA near $83,398. This bearish outlook would gain significant momentum if macroeconomic data turns negative or if there's a lack of fresh bullish catalysts. To recap, The important price levels to watch for BTCUSD are immediately the $112,000 to $113,000 zone as current support, with the 50-day SMA at $110,408 reinforcing it. If these levels fail, $108,000 and $100,000 are the next critical downside targets. On the resistance side, $117,000 is the immediate hurdle, with a break above potentially leading to a retest of the $123,000 to $124,000 range. An unbiased prediction suggests a moderate likelihood, around 50 to 60%, of Bitcoin consolidating around the current $112,000 to $113,000 level in the very short term, given the mixed signals from institutional buying and regulatory concerns. The probability of a rebound towards $117,000 within the next week stands at about 40%, conditional on no further negative regulatory news and continued ETF inflows. Conversely, a dip to $108,000 has a roughly 30% chance if selling pressure intensifies or liquidations continue. Traders should closely monitor the SEC's ruling on Grayscale's multi-asset ETF, due by September 30th, which could be a significant market mover. Also, keep an eye on any further announcements regarding token unlocks, as these can increase selling pressure. Look for increased volume on any significant price moves and watch the Fear and Greed Index for shifts in overall market sentiment. For long-term investors, the current dip might present an accumulation opportunity, especially if Bitcoin manages to hold above $110,000. However, short-term traders should exercise caution and prioritize risk management amidst the prevailing uncertainty.